Hello traders and welcome you to the my YouTube channel PJ Pivots, and today we will discuss a very important strategy called fake breakout strategy. This strategy might change your trading forever because now you will know that any breakout, whether it is a likely to a real breakout or it is a fake breakout, you will uh, have an idea and which will give you an edge over the other traders. So let us start with this video. And for this strategy we need only two indicators. Number one indicator is called CPR. Number one indicator is called CPR. What is CPR? CPR means central pivot range. You can already see in my chart. You can already see I remove once Nifty chart and show you where the CPR is. So now you can see these three lines, two blue lines, and below there is a pink line. You can see also here on the 9th February two blue lines, and below two blue lines, and in between them there is a pink line. This is CPR. Here two blue lines and between a pink line, this is also CPR. So this is called CPR. So I have removed some indicators, one indicator, the moving average, to show you clearly. Now you can see these three lines very clearly here and here. So this is called CPR, central pivot range, very important indicator. Also you can see above some dotted lines, but these are pivots. I use for another strategies, but not for this strategy. This strategy only we need CPR. Only we need CPR. CPR is very important, folks, because CPR can tell you that whether the market likely to have a trending day or likely to have a sideways day. So this means that CPR is a very underrated trading indicators, but I think CPR is the most powerful indicator in any trading system, because suppose before the opening of the market you will know that today whether it is going to be a trending day, higher chances, or what are the chances you for any particular day, whether it will be a trending day or it will be a sideways day, you will be knowing this thing before the market opens. So this will give you an edge, and also you can plan according to that. How you can know? If CPR is on the wider side, like this day, 10th of February, CPR was on the wider side, like this day. CPR was on the wider side. Now look at we will look at the Nifty chart and see what happened to these 2 days. So this is Nifty chart, and tell me what you can see. You see two sideways day. You see two sideways day. Look at this. Look at this. These are not trending day. This is not trending. Okay, this is called a sideways day. So which means you will have an edge before the market opens. But CPR I can talk a lot of things about. So this first of all, you just need to know only two things: that if CPR is on the narrow side, we are likely to have a trending day, and CPR is when it is a wider side, we are likely to have a sideways day. But remember friends, nothing is 100%. This will not work 100% of the times, but most of the times it works. But sometimes on a wide CPR day we might have a trending day, or sometimes on a narrow CPR day we might have a sideways day. Like this, if I go some previous days, I can show you. Look at this. This was a narrow CPR. Look at this. This was a narrow CPR, and what market did? Market opens here and goes all the way till here, which means it was a trending day. And if you go little further below, look at this. Market, it was a narrow CPR, and market opens here and all the way till here. Most of the day it was trending. So which means on more than half of the day it was trending. So you can see, you can go below, you can see whatever day. Look at this, a white CPR, which means, and it was another sideways day. But again, this is not 100%. Look at this, this was kind of a white CPR, and this was again a kind of a white CPR, and market was sideways till here. Most of the day market was sideways, but in the last 1 hour market broke and it was made kind of a V recovery day, or you can say it a V recovery day, or you might see a trending day. But once again, nothing is 100%. Everything can happen in the market. So this is the first indicator, but very important indicator for this strategy and also for my trading style. I use CPR. I see CPR every day, whether it is a wide or narrow, and according to that I trade only. But if you are new to this indicator, by just looking at it you might sometimes get confused. So that's where you can add another indicator, which is CPR width, you might see below there is this green kind of indicator, which is CPR width. I am going to show now in the indicator menu where are how these two indicator are named and how they look like. So this is the indicator menu, and this is first indicator is here. I have already marked these indicators in the favorite menu. You can search and find these. So this is the CPR, and the next indicator was below, which was the CPR width. So these two are the indicators. Now let us go back to the chart again and see how our strategy will work. So now let us talk about CPR width for a little bit of time, and then I will move to the strategy. So little I zoom the CPR width and look at this. This is CPR width, and these green buildings shows the width of the CPR. If these green buildings are near 0.20 level, this line, this dotted line, then it is a wide CPR. Wide average to wide CPR. If it is above 0.20, then it's a, if these green lines are above 0.20, then it is clearly a wide CPR. I will show you in this video later when I explain the strategy. So remember this level 0.20. If these green buildings are near 0.20 level, which means that our strategy can be applied. Fake breakout strategy can be applied. Now, how to apply fake breakout strategy? Very simple. You just need to look at the below. If our CPR width is near 0.20 or above it, it should almost touch the 0.20 or it should cross the 0.20, then only our strategy applies. Okay, so in the 10th February you can see that there were a lot of fake breakouts. There were two fake breakouts particularly. Number one, when this important level in the morning got broken, but it was a false breakout and you got a good profit. Number two, when days high in the 12 or near 11 o'clock, the days high got broken, and immediately next candle it showed a fake breakout, and once again look at this, market gives you good profit. Now let us go back again in the previous day and look at this. The width once again shows us that today is the day for fake breakouts. So you can see this was an important level. This was an important level in the previous day. Market broke it and immediately reversed, which means our fake breakout strategy once again made us good profits. Next, you can see this day's high growth broken and market did not able to sustain the breakout. Although it didn't give us profit because the day was almost as the closing, but it did not hit our stop loss. Now let us go back. So if you go back, you can see that here it is not near, on the 8th February it is not near our 0.20 level, so our strategy will not apply. Next, if you go further, here also the strategy cannot be applied. Next, yes, this is a very wide CPR. So we will look out for fake breakouts only. And as you can see, this level, market tried to break, made a consolidation. I would have entered long here. I would have entered long here on this pin bar. You can see this pin bar and look at this. Market gave us profits once again. Now go back here. Also you can see that it was near our level, and in the morning market, what market did? Look closely. In the morning, what market did? Market opened above previous day high. Market opened above previous day high, and when the first candle low got broken, I entered short here because it was not looking very strong. And look at this, market once again gave us good profits. So I can go on and on and on every day, and this strategy works every day. Remember friends, every strategy works. Look at this. This was also near. I will look for two things. One thing is fake breakout. Number two things, if market shows a pin bar or any bearish, any negative signal on the important resistances. Look at this pin bar. Once again, how much profit could you have made? So you have also seen a lot of strategies on the internet, and also you have seen the strategies working. So every strategy works, every strategy has its probability game. So you have to trust one strategy, you have to trust some strategies and apply again and again to master these strategies. So whenever these scenarios arises in the market, you capture them and you enter them. So in this scenario as well, you should follow strictly your rules. What are my rules? I have only three type of exits. Entry, I have already told you how I make entry. Now what are my take profits and how I exit the trade. I exit the trade only in three scenarios. Number one scenario, if I get 1:2 risk reward. If I get 1:2 risk reward, I immediately exit. Number two, if I am getting more than 1:1, I trail my stop loss to cost to cost. I trail my stop loss to cost, and then I exit the trade. If a market reverses and hits my cost to cost, I exit cost to cost. And number three, of course, the SL. 1% of my capital, and I exit on that. So these are only three exits and not any fourth exit. So you should stick to your plan as well. So this is the strategy. Remember friends, every strategy works. You should stick to your plan and plan your trade and trade your plan, and always follow risk reward and never over trade. Never take, my theory is never take more than two trades in a single day, because two trades are good enough to make you money. If two trades can't make you, then neither next trades will make you profitable. So follow risk reward and try this strategy. You can also backtest this strategy in the previous month, previous year. This strategy works at 8 out of 10 times. So check out from yourself. Okay, bye bye friends, take care.